Well, there are a few things. So first, you just touched on the first point, which is the stock is off today 9%. When we did the upgrade, the stock had gone down already about 13, 14% off of a high of about 30 days ago. We think that puts the company somewhere around 10, 11 times cash flow. We think that's very attractive, particularly when you compare it to others like Amazon in this space that are trading at double the amount. The other thing is if you look at the core eBay, that business actually continues to perform at the high end of expectations. Marketplace continues to do really well. Now it's growing at or even faster than e-commerce. PayPal continues to grow north of 20%. And the last point you actually mentioned, which is MasterCard, has kind of rained on their parade a little bit when they announced the fee hike. We've ran a number of sensitivity analyses that effectively shows that, under a worst case scenario, it's going to cost them a few pennies on EPS of $2.70 this year. So we don't think it's material.
And where is the real growth right now? Is it on PayPal, or is it on the traditional marketplace side of the business?
So PayPal has historically grown much faster than Marketplace, and historically meaning over the last 3-4 years. What's interesting is that since John Donahoe took over eBay, about 3 years ago, we've seen an acceleration in the Marketplace's business. So in the fourth quarter, for instance, he grew at 16%, which is a material acceleration from what it did before. PayPal, on the other hand, grew somewhere in the low 20s, 23, 24%, but at a decelerating rate.
Yeah, and by the way, international, I know from your notes, which I read earlier, up about 24%. You, Howard Ward of Gamco Growth Investors, are long eBay.
We are. It's been a strong stock, and John Donahoe's done a great job with the company. I'd like to ask Youssef, to what extent you think you might add shareholder value here if you were to spin off PayPal?
Well, you would. The problem is I don't think management is in any hurry to do just that. PayPal and marketplaces are extremely integrated. I think there was probably talk of that spin-off 3-4 years ago when PayPal or when eBay was trading at a valuation below that of what a PayPal IPO would have fetched. So then it made a lot of sense. I don't think really right now it makes a huge amount of sense.
And Youssef, this company consistently growing earnings 16, 17%, did that each of the past 2 years, supposed to again this year and next year, trading it at what, about 18 times earnings. Sounds cheap, doesn't it?
Correct.
That's a PEG ratio of 1. So why not up your target higher?
Well, you have to be careful because there's still some uncertainty on the macro level. Management is looking to make some of the changes to marketplaces that have worked domestically, internationally, that also carries some risk. And lastly, you guys said it, MasterCard and Visa and American Express are all looking at PayPal, with some envy considering the growth rate they've been on. So, there is some risk there, but even with that, I agree. I think there is some upside to our numbers still, but even with a $56, $57 target, you still have some upside.